A6.1 VAT, Partial Exemption. You will have been introduced to the basic principles of VAT at F6. In this video, we will be looking at the VAT implications of partial exemption. In other words, where a business is making both exempt and taxable supplies. Remember from F6 that if a VAT-registered business was making wholly taxable supplies, then it was able to recover any input VAT that it had suffered on buying goods and services for the purposes of making those taxable supplies. Furthermore, if a business is making wholly exempt supplies, then it cannot recover any input VAT suffered. But what about those businesses that make a mixture of exempt and taxable supplies, such as an optician where the sight tests it performs are exempt from VAT, but the glasses it sells are VATable? How much input tax, if any, can they recover on all the purchases they have made as a business to help them provide their goods and services to customers? For such a partially exempt business, some, if not all, of the input VAT should be recoverable, subject to certain rules and de minimis levels. We start by identifying which amounts of input tax suffered on purchases are attributed to taxable supplies. These amounts of input tax can be recovered in full. Then we identify which amounts of input tax suffered on purchases are attributed to exempt supplies. These amounts are, in the first instance, not recoverable, but we will see shortly that they may end up being recoverable if they are below certain de minimis limits. Then we identify which amounts of input tax suffered on purchases are attributed to both taxable and exempt supplies, known as the residue. This could be, for example, stationery costs, heat and lighting, or rent, which is used by all parts of the business regardless of its VAT nature. To determine how much of this amount is recoverable, we need to calculate the proportion of total supplies made that are taxable. We do this by dividing the total amount of taxable supplies by the amount of total supplies. Total supplies being the taxable supplies plus the exempt supplies. When doing this, make sure that you exclude any capital goods and that you use VAT exclusive figures for the supplies. Round the resulting percentage up to the nearest whole number. Then we use this percentage to split the residue amount into recoverable and irrecoverable. The next step is to check the total amount of irrecoverable VAT against de minimis limits to see whether it really cannot be recovered at all. There are 3 de minimis tests to check, and if any one of them applies, then all of the input tax suffered in that period can be recovered. If the total amount of irrecoverable input VAT is no more than £625 per calendar month and no more than half of the total amount of input VAT, then all of the input VAT suffered will be recoverable, even the amounts associated with exempt supplies. If the total amount of input VAT is no more than £625 per calendar month, and exempt supplies are no more than half of the amount of total supplies, then all of the input VAT suffered will be recoverable. If the total amount of input VAT less input VAT directly attributed to taxable supplies is no more than £625 per calendar month, and exempt supplies are no more than half of total supplies, then all of the input VAT suffered will be recoverable. Let's work through an example to see how these rules would be put into action. If we were looking at a partially exempt business's sales for a quarter, and we were told that they made taxable supplies of £50,000 and exempt supplies of £10,000, then we would use that information to calculate the partial exemption percentage by dividing 50,000 by 50,000 plus 10,000, i.e. taxable supplies divided by total supplies. This would mean that 84% of supplies are taxable. We then use this percentage to apportion the residue amount of input tax suffered. Input tax suffered only on taxable supplies amounted to £3,500 for the quarter and £600 on only exempt supplies. There is a residue amount of input tax of £1,800 that was incurred to produce both taxable and exempt supplies. We first of all split out the amounts we can easily classify into recoverable and irrecoverable. So there will be £3,500 recoverable input VAT for starters and £600 of irrecoverable VAT. The residue will then be split between them by adding 84% of £1,800 to the recoverable amount of £3,500 to get 5,012, and by adding 16% of 1,800 to the irrecoverable amount of £600 to get 888. Before deciding what is definitely recoverable and what is not, we must check the de minimis limits, remembering that if any one of the limits is met, then we can reclaim all of the irrecoverable input VAT as well as the recoverable amount. In this example, we had an irrecoverable VAT amount for the quarter of £888, which is less than the de minimis limit of £625 per month, i.e. 1875 per quarter, and is not more than half of the total input VAT amount of £5,900 for the quarter. This means that all of the £5,900 input VAT can be recovered from HMRC, not just the £5,012 that relates to taxable supplies. You would perform the calculation as we have just seen for each quarter of a VAT year. At the end of the 4 quarters, we need to do an annual adjustment, whereby we re-perform the whole calculation again, but this time we calculate a T over T plus E percentage based on taxable and exempt supplies for the whole year, and then allocate out the annual recoverable, irrecoverable and residue amounts accordingly. Then we would check the de minimis limits as before, but this time we would scale up the limits to apply for a whole year. So for example, it would become total input VAT of no more than £7,500 for the year. Any over or under recovery of input VAT from during the year is adjusted for in the first VAT return after the end of the VAT year. Alternatively, the business can bring that forward to the final VAT return of the year, which would be advantageous if a repayment was due from HMRC. There are some other options available to the business other than what we have looked at so far. Instead of working out the taxable supplies percentage on a quarterly basis, instead it could just use the prior year's percentage for each quarter, with any over or under recovery being adjusted for by way of the annual adjustment at the end of the VAT year anyway. Whichever approach is taken, it must be applied consistently throughout the VAT year. Another option for certain businesses is to only have to apply the de minimis test once a year rather than quarterly. This can be done if the business qualified as de minimis in the previous VAT year, and the input VAT for the current year is not expected to be above £1 million. If this approach is chosen, it must be applied consistently throughout the VAT year. An annual adjustment calculation still needs to be performed at the end of the year to see if there has been any over or under recovery. The taxpayer could also ask HMRC for permission to use any other form of calculating how the residue should be apportioned, as long as it is deemed reasonable by HMRC.